Okay.
Okay. So now
All right.
I'm on good. Or let's talk about the basic stuff first. From our classes, I normally preach about market structure, right? Market giving us
Yes.
what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? That's
Yes.
an option. Breaking structures what to the upside, right?
Mm-hmm.
Now, this is just the textbook illustration, but on a real life market will not give you something clean as this. So with more screen time, you have to train your eyes, to understand it. So with the more you practice, the more you can identify what structures. Are you getting it? So the more you practice, the more
Yeah.
you can be able to like identify what structures. Market giving was higher high, giving structure. Higher high. Then in a downtrend, I said we have different kind of market structure, right? The downtrend,
Mm-hmm.
uptrend, and then the ranging markets, if you can remember.
Yeah. No.
Okay. So this is an uptrend, and then we have what? A downtrend. Oh. Right? So in a downtrend, market will give you a series of lower lows, lower high, lower lows, lower highs, lower lows, lower highs. Breaking was structured to the downside. And what did I say? I said in an uptrend, market was the lows are what's protected, the lows are protected, and the highs are what? The highs are targeted, right? So I
Yeah.
keep talking about this because it is the foundation of any market or any pair you want to trade. If you can't identify structure, you keep on struggling to to get your entries perfect. So in a downtrend, you have what the highs are protected, and the lows are what the lows are targeted.
Targeted.
Can you see it? So then in a range market is just moving sideways. It have no bearing. It's just moving what sideways, moving between the support level and the resistance level, right? So
Mm-hmm.
why is market structure very important? Now, looking at this structure, if market eventually, let's say this something like this, breaking this recent high, right? And we said an high is what is a protected high. Let's say market breaks something, next market did something like this. What do you see happen? Instead of market to give us a lower high here and then begin to come down, what do you see happen? Market break above what? This recent high. This is the recent high, right? So
Change
what
of
do you think
price.
happened? Market shifted direction, right? From a downtrend to what? To an uptrend, right?
Yeah.
So if market break a recent high, go pull back, and then what? It will continue to what? Give us higher highs, and higher lows. So now going back to a real life chart, now we talk about market structure just to brush up and to pick our brains. Now looking at this structure now, looking at gold on a weekly time frame, what do you see happen? This is
Uptrend.
clearly a bullish market, right?
Mm-hmm.
So now I want to talk about range. A range. That's a gap between where like a range or a trading range where you can take your trade. That's the recent leg of markets. Why? Let's say market is doing higher highs, higher lows, higher highs, higher lows. Now, where is the recent leg of the market? This is the recent leg. This leg you are seeing is what is the recent leg of the market. This zone you are seeing here is what the recent leg of the market. So anything you are doing now, any trade you are taking will be what within this range. Either the market will come back, pick up your what, come back to another block, and then what begin to go up to take out this high again. So when this high is taken out, what do you think will happen? Market will what, form another leg again. I don't know if I'm making sense. Market will form another leg. So that's what the essence of a trading or a range or a trading range. You have to what take note of a trading range, the range at which we should be. If we are trading, we should be staying either within the range and what not go above it unless market what shows that okay, I'm going to what go out of this range. If markets go out of the range, what do you think I'll be doing? We'll be looking for opportunity to go with the market. But if we are taking any trade, our trade was within this range. So that's what I mean by what a recent leg of the market. Now, looking at the structure, where is the recent leg? From here, right? From here,
Mm-hmm.
from here to here, right? This is what the market did.
Yeah.
Lower high. So these are internal structure. Lower low, lower low, then was lower high. So what do you think happened? This is the word lower low, and then this is the word lower high. So this is the recent leg of the market. And then looking at the market, what do you think will happen? For 3 weeks, for the past 3 weeks now, gold have been bullish. So sorry, for the past 5 weeks, 1, 2, 3, 4, 5, meaning 1 month and what and 1 week, gold has been what clearly bullish. What do you think happened? Gold have been what overbought. So if anything buying now, though looking at talking about momentum, if you want to like talk about momentum, momentum is what when the bulls are in control of the market, you go along with the market, right? Are you getting it? So now, but
Yeah.
looking at this, gold is overbought. And I told you that when a high or a recent high is taken out, what do you think will happen? There's going to be a pullback, right?
Yeah.
Are you getting it? This is the last high, structural high. This is the last one, structural high of the market. Higher high. And then what? This is the recent what? The recent one, higher high. But looking at your left side, this is the last one, last structural high of the market. And when a high is taken out, what do you think will happen? There is going to be what? A pullback to give us a higher low, right?
Mm-hmm.
So we are anticipating what a higher low before the market should to continue to be bullish. But then we as a traders, we are reactive traders. We don't assume. Are you getting it? We react to what the candlesticks are telling us. If the candlestick says it wants to buy, we follow. If the candlestick says it wants to sell, we follow. So now, based on my assumption or my narrative on the higher time frame, I know the market is clearly bullish. So what should I be looking for? Opportunity to buy with the market. And then my second narrative is that what? Market is overbought and there is what a recent structural high has been taken out, and I am anticipating what a higher low to be formed. But then the momentum is clearly bullish. Gold have been buying for what for the past 4 months, 5 months. Are you getting it? So for the past 5 months. So I have no business trying to sell. Are you getting it? But then let's go to a lower time frame. Now I've formed my narrative. As a trader, you start what? You start from a higher time frame to form your own narrative. Are you getting it? Now let's go to a daily time frame. Our weekly narrative is what? We said gold is bullish and we are anticipating what? We are anticipating a retracement. Are you getting it? Before the continuation, right? So looking at this leg again, now on the daily time frame, we do not have much information. Now, on the daily time frame, what am I looking for? I'm looking to mark out my key zones, my other blocks, fair value gaps, or support and resistance level. But then, look at this zone here. Looking to the left side, there is what? A pullback, a short pullback, And then gold is currently what? At a what? At a daily demand zone. Can you see the demand zone here? Supply zone, I mean, sorry. Let me delete this. Can you see this here? Can you see this block here? Right?
Yes.
So
Yeah.
there is possibility of gold what? Of gold pushing down. Are you getting it? That was why I sent a chart to the group that I'm anticipating what a market structural shift, and then what I'll sell to what to the nearest POI. So if eventually gold is able to what give me a market structural shift at this zone here, this supply zone here. But if eventually, now that's why I said we are what? We are narrative traders. We are reactive. We only react to what the candlesticks are doing. You don't assume. If eventually market is able to break above this zone here, this other block here, and what break above it, then what do you think is happening? My narrative has shifted. I'll then look for opportunity to work for the retracement and then continue with what? With the market. I don't know if I'm making sense. So now on the daily time frame, there's no much information. What am I anticipating on the daily time frame? I'm anticipating what price towards to give me a market structural shift around this zone. Are you getting it? If I'm able to get that market structural shift, and then what? Short to the downside. But that's for what? The daily time frame. Now, the weekly time frame, from the weekly time frame, our bias, we said gold is clearly bullish. Momentum, like the momentum is what? Is clearly buy. For the past 5 months, gold have been buying, but then a recent structural high has been taken out, and then we are expecting what? A pullback, but we do not assume. We what? Follow the structure of the market. We follow structure of the market. That's what for the daily time, for the weekly, and then the daily, we identify what? A key supply zone that market is likely going to react from. But if markets did not react from this what key supply zone and is able to break above it, then my bias will shifted from what looking for opportunity towards to catch the retracement and then what continue buying because the momentum is clearly bullish. Now let's go to 4 hour time frame. Now we can refine that supply zone on the 4 hour time frame. Now let's define the zone. So we have a 4 hour supply zone. We can refine the zone. You can see. So clearly, market is not reacting from that supply zone. So what's that telling you? There is highly what like there is high possibility of market breaking above this zone. So when market break above a what above an order block, we call it what a fail order block. So if market is able to break above it, then what are you thinking? I will just be looking for opportunity to buy. But if market eventually on the lower time frame of 15 minutes or the lower time frame give me a market structural shift, I will then what look for opportunity to sell with the market. So as a reactive trader, either markets do what? If market do this, then I look for what? Buy. But if market do this, then I look for what? Sell. I don't know if I'm making sense. So that's the
Yeah.
essence of what? That's the essence of top-down analysis or what you starting from a higher time frame. Now let's go towards a 15-minute time frame to mark out our structure again. So on the 15-minute time frame, this is the 4 hour order block, right? This is the 4 hour order block, 4 hour order blocks. And this is what last structural high on the 15 minutes. The last break of structure before market tapped into what? Market tapped into what? Into this 4 hour order block. So for me to what? For market to give me a structural shift, market have to what? Come below this what? Break below this what? Recent low, right? And then what? I will mark out my other block on the 15-minute time frame and then go in line with what? Go in line with the structure. But now, looking at this momentum, it seems market is not ready to give us what? A structural shift. But instead, market might what? Continue to the upside. Are you getting it? Market might continue to what? To the upside. So I don't know if I'm making sense. So
Yes.
let me go over it again. I said on the weekly time frame, our narrative was what? The market has been buying for what? For the past 5 months. Market is clearly bullish for the past 5 months. And a recent structural high is taken. So we are what? Cautious. When a high is taken, you should what? Anticipate a what? A pullback, right? But then looking at this momentum, the bullish momentum is so strong. You do not assume to what? To just start selling. Are you getting it? Just because a recent high was taken. We have to see what? A structural shift on the what? Either the lower time frame, right? To capitalize on the pullback, right? So for the weekly bias, for the weekly narrative, a recent structural high has been taken. Market is clearly bullish. And looking to my left side, there is no any zone that market is going to react to. Let's assume, let's say, for example, market was like this, higher highs, higher lows, higher highs. This high here is this high, and then market was like this, right? And then we have what? Another block on this side. On this weekly time, let's say here, this zone you are seeing is another block or a supply zone. Let's say a supply zone, and this high you are seeing is this high here. What do you think will happen when market taps into this supply zone? What do you think will happen? Yeah, it's going to be a reaction, right? Either market
Yeah.
will be able to break above it, or market will what? Give a market structural shift, right? To the downside.
Mm-hmm.
Are you getting it? But then we do
Yeah.
not have any zone. Looking at, you can see, looking at this side, looking at the candlesticks here. Let me zoom out. Do you see anything on the left side that can stop this market from moving up further? No, nothing. There's no any supply zone to the left side, right? Let's take a look at one. Aha. Have a look at the Euro JPY. You can see on the weekly time frame, market is currently at what? At a supply zone. What do you think will happen? This is a supply zone. This is what I'm trying to explain. This is a supply zone. Market is currently at the supply zone. What do you see happen? When market tapped into it, there was a sharp what? A sharp pullback. Can you see it?
Mm-hmm.
Yeah, what? That's the essence of what? I didn't mean we did not let's say I didn't mean we didn't start from the weekly time frame. And we were let's say starting from 4 hour, or let's say from a lower time frame. We might not see this supply zone. We might not see it. That's why it is good to start from a very higher time frame or weekly time frame to see what key levels that market might react to. Now let's do a breakdown of this market too. Now let's say we have let's say we have the recent leg of the market was here, for example, and this is a recent leg, right? Let's assume this one was not here. These things don't dey. All these things have not happened. Are you getting this? We're just here now. No, now looking at this structure, clearly the market is bullish, right? So anything we are doing is either what market was giving us series of higher high, higher low, higher high, then higher low. What do you think will happen? We're anticipating what? A higher high, right? And what do you see happen? Market broke out of this recent leg and what eventually what break out. And what are you anticipating? We're anticipating market to keep pushing after market break out of a range of a key of a recent leg of the market. I don't know if I'm making sense. And what do you see happen? Market broke out of it. Then we now have to look to the left side to identify key levels where market might react from, might react to. If eventually market was, let's say, was to be going up, 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 a recent we need to look to the left side where markets can what? Can react to,
Yeah.
or key levels market can react to, and we identify this zone as what? As a supply zone. And when there is a supply zone, anticipate what? A pushback or a reaction to the market. So market, let's assume market is here now. Now let's go to a lower time frame or daily time frame. We can refine that supply zone. So let's say markets tap into the supply zone on the daily time frame. Market tap into the supply zone. What are you anticipating? You look for what? A market structural shift. Market sweep a recent high, right? And then give you what? Break the what? The recent low to the downside. You then mark your what? Your other block to take your entry from. So this is what you are looking for. Now, this level you are seeing here is what? Is the recent high. That's what I marked here. And then this sweep you are seeing is a sweep. Market reacting towards to the supply zone. Market reacting to the supply zone. That's a sweep. This is the sweep here. So if market is able to like give me what? A structural shift and is able to break below this recent low. This is the low here. This is the low. So I'll look forward another block on a lower time frame to take my entry. Now let's go to a lower time frame. So you can see, you can refine the zone. Think the market reacted to a breakout. So you can see that zone here. This high I marked out on the daily time frame. Now on the 4 hour time frame, you can see it as a sweep. Then what market sharply change what? Give us a structural shift. Market structural shift, inducements, and then what? What do you see happen? Market tap into what? Into our POI and what? And begin to fall. Right? You can easily on the lower time frame, you can catch this. This on the lower time frame of let's say 30 minutes or 15 minutes. This move is a strong move. Are you getting it? You can catch what? You can catch a strong move. The 4 hour time frame is just what? It's just to identify your key levels, but you can refine your what? Your entry on the 15-minute time frame. This pullback you are saying is what? Is a strong move. Adimi is what? Is on a lower time frame of 15 minutes or 30 minutes. It's going to be what? A strong pushback. So you can capitalize on what? On that sell. Can you see it? So that's the essence of what? Top-down analysis. You start from the weekly, know the direction of, you identify what? The direction of the market. Where is the market going? Where is the market going? Right? Where is the market going? Then look to the what? To the left side. Look to your left side. Is there any key level that market will react from? Is there any zone that market will react from? Right? That's the essence of what?
Mm-hmm.
Of starting from the higher time frame. So the weekly is to what? Get your narrative. Just define your narrative. Look at the momentum, mark out the what? The recent leg of price action. So this is the recent leg of the price action. So anything happening now will either be within this zone, this weekly zone here. Either market push further up or market what? Give us a sweep. Sweep this high, this recent high you are seeing. Market sweep it, and then what? Give us a market structural shift. Then we'll now anticipate what? A pushback to a key level. On the daily, you identify key levels too that market will react from, or you refine zones or the levels you have on the daily time frame. Then on the 4 hour, you refine further. You just keep on refining. The weekly, you define your narrative. What's happening on the weekly time frame is are the buyers winning or are the sellers winning? Daily, you mark out key zones or or possible zones where market is likely going to react from. You look to the left side where market is what likely going to what react to. Then on the 4 hour, you refine those zones. And then on the 15 minutes or your entry time frame of 15 minutes or 30 minutes, what do? You look for what? You look for opportunity to refine those zones so that you can take what? Your sniper entries. I think that's that for narratives. That's how you what get your narrative. Weekly to define your narrative or where or who is winning in the markets. Mark out what your recent leg of the price action. Daily, mark out key levels. On the daily, you mark out key levels where market is what likely going to react to. Even on the weekly too, you can mark out key levels. If you look to your what left side, then on the 4 hour, you look to what refine those levels. Then on your entry time frames, you can even look to what to refine them further. I don't know if I'm making sense. Guys, am I making sense?
Yeah.
Please, any question? Or should I come again? I
No.
said weekly, you define what? You get your narrative. Who is winning? Are buyers in control of the market? And is the market clearly bullish? Right? You mark out what? Your recent leg of price action. Let's say market is doing higher high, higher low, higher high, higher low. So where's the recent leg of price action? It's going to definitely going to be what? This from this pullback, this lower low, lower high, and then what? Lower a higher high, right?
Hello.
So
Mm-hmm.
anything that is going to happen is going to happen either markets what push back to give us what a retracement, right? Before what continue to the upside, or markets might decide to push back small, break above this, and then what you look for opportunity to continue with the market. I don't know if I'm making sense. So that's the essence of narrative. Mark out your recent leg of price action and look to your left side to identify key levels that market is likely going to react to if markets approach that zones. Then on the daily, you tend to look to refine those zones again. On the 4 hour, you refine them even further. Then on the and your entry time frame, you look to even refine them further to get perfect or sniper entries. That's essence of what? Essence of top-down analysis and narrative. So every weekend, you do your you have the pair you are trading, make sure you identify the narrative of what you're going to look for the following week. That's the essence of narrative. Because if you just jump into the market, let's say tomorrow is Monday, you didn't do any analysis, nothing. You didn't check your higher time frame of what's happening. You don't know what's happening on the higher time frame. Like now, let's say this is what the recent price action. Let's say on the for example, let's say weekly is clearly bullish and there is a key supply zone here. But on the 4 hour time frame, market is bearish. I don't know if I'm making sense. And you now, you didn't check your weekly time frame, you don't know what's happening. And the market, let's say market is close to this supply zone. And let's say for example, market was buying to that supply zone and you have your setup form around that zone. You didn't even know there is a supply zone here. What do you think will happen? Market will take you out because there is a supply. Market is what is all about reaction. You as a trader, you don't assume. You just follow what the candlestick tells you. You do not assume. Your narrative can change anytime. If let's say you have a bullish bias, but eventually market is giving you a bearish bias, or let's say your demand zone, you are anticipating that market should buy from this your demand zone when market gets there, but then market eventually broke below it. What do you think will happen? My bias will now shift from buying to to selling. Are you getting it? We are just reacting to what the market is giving us. We don't assume what the market is going to do. I don't know if I'm making sense. Are you getting it?
Yeah. Mm-hmm.
So question, we only have 4 minutes. So
Thank
you
you
have
so
four
much. There's no question.
question.
Thank you. Thank you.
What do you
Good evening,
understand? Do
boss.
you
I have a
understand?
question.
You have a question.
Yeah.
Go on.
Uh, okay, my question is on entry.
Okay.
Okay, it's is when do you think it's the right time to use confirmation entry and direct entry, when you have identified a setup?
I think I've explained this thing before in one of my videos. There's this video I uploaded on my. I explained that.
Yeah, I think we did one time like that.
Let me go there. Let me. I explain it. Steve, I explain it now. Let me. So I explain everything you need to see before you can what either take a confirmation entry or what. You can go and watch the video. I getting it. Because if I'm going to explain it, to take much of our time again. But shall I just shed a little light on it? Confirmation entry, basically, when you take confirmation entry is what when market is ranging or maybe market is choppy and market is close to your what close to your other block or maybe your points of interest and you are not certain about the direction of the market, you look for what confirmation on which direction the market is going to take. I get in it. And then aggressive when market is very volatile. Aggressive entry. Let's say gold can be very volatile. Let's say gold is doing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and you have your entry here, and gold just eventually pushed was like begin to start selling all the way from here to your entry. You have no business looking for what? Looking for confirmation because if you want to, if you end up looking for confirmation, gold, in fact, gold might even fly without waiting for you. It will not even give you confirmation for entry. So when market is very volatile, you avoid what? Confirmation entry. And when market is what? Market is choppy or you are not certain about the direction of the market, what do? You just take the aggressive entry. Sometimes I prefer aggressive because gold sometimes can be very volatile. If you start looking for what confirmations, in fact, you're going to miss out most of the times. If you start looking for confirmations, so there's no need looking for confirmation if you are certain about your what, if you are certain about your entry. If you see everything you need to check, if let's say you have your structure, liquidity, and then your points of interest. So if all those things check out, you have no business looking for any confirmation unless you have doubts. You have doubts about about taking that trade. You can okay, only let me take the confirmation route. I don't know if I'm making sense. Steve, are you still with us? Hello?
He's out. Maybe his connection or something.
All right. I think that. We have less than 1 minute. All right, guys.
Thank you
Uh,
so much. Thank
yeah.
Thank you, boss.
All right. Take care, guys.
you. Thank
Wow.
you.
Thank you.